guys, it's your bald Indian here, and today's video is a little bit different and also in continuation to our personal finance series. This might be one of the most important video I have ever made. The most important thing when it comes to building wealth, it's credit. And today I'm going to help you understand what is credit and what are 5 things that affect your credit score. I know when I talk about credit card, most of the people roll their eyes back in their skulls. One thing majority of the Indians are afraid of is credit cards and loans. We have been told since childhood by our friends, relatives and parents that you should never apply for a credit card or a loan itself. Well, I do understand and it is somewhat true, but also wrong at the same time when you are planning to build wealth. Let's say you're looking to buy a property which is $100,000. And if you take the old route by paying that 100K in cash, your net worth is around 100K. But wait, what if I told you you can own 2 properties and you can double your net worth with same amount of cash that you're sitting on? And that's the magic of credit and loans. But in order for that bank to loan you that money, they refer to something called credit score to check your credibility. As per CFPB, Consumer Finance Protection Bureau, a credit score predicts how likely you are to pay back a loan on time. A scoring model uses information from your credit report to create a credit score. This is also something similar to CIBIL score back in India. A credit score is a number between 300 and 850 which shows the credit worthiness of that borrower. And here are 5 things that affect the credit score. Number 1, payment history. Payment history is the most important thing in the credit scoring system. And even a one missed payment can affect the credit score negatively. Banks want to make sure that you will pay back the debt and on time when they are considering you for the new credit line. Payment history accounts for 35% of the overall credit score. For example, let's say you're asking for $100 from your friend, which you intend to pay it back at the end of the month after your salary. But for some reason, you're unable to pay that $100. Do you think your friend will lend you another $100? There you go. That's what payment history shows to the bank. Number 2, credit utilization. Credit utilization is the next most important thing after credit history, and it accounts for 30% of your credit score. The credit utilization ratio is calculated by dividing the total revolving credits you are currently using by the total of all your revolving credit limits. This ratio looks at how much of your available credits you are utilizing and also gives a snapshot of how relevant you are on your non-cash funds. As per FICO, which is one of 3 major credit reporting bureaus, using more than 30% of your available credit line is going to negatively affect the credit score. Let's say you have 4 different credit cards with a $10,000 limit on each and every credit card totaling to $40,000. In this case, if you spend more than $12,000 combined on all the credit cards, it is going to negatively affect your credit score. The next factor is credit history length. This just looks at how long you have been holding the credit. It's the average of your oldest credit line and the newest credit line. The longer your credit history, the higher your score. And this accounts for 15% of your credit score. So the next factor is credit inquiries. So whenever you apply for a new credit card, banks usually do an inquiry on your behalf, which is called an hard inquiry. There are 2 different types of inquiries, which is hard inquiry and soft inquiry. And depending on this type of inquiry, it affects your credit score. Credit inquiries account for 10% of your credit score. The next factor is credit type, and this also accounts for 10% of your credit score. In this particular factor, it looks at what is the different type of credits that you're using. For example, a credit card, car loan, mortgage, and other credit products. Usually people with top credit score have a diversified portfolio of credit accounts. So for example, if you have a home loan, that is going to positively affect your credit score versus having a credit card, which has an outstanding balance of more than 30% of available credit line. So there you go. These are the 5 things that affect your credit score. And here is the range of credit score, which shows you by category what is a good and what is the best credit score. Everyone starts at 650, which fall under a fair credit score. You can pull your credit reports for free every year from these 3 government approved credit reporting bureaus. I'll link it in the description below. Also, please keep in mind there are a lot of scammy websites out there which will tell you that they are providing your credit report for free, but that might not be the case. Well, that is for today guys. Hope you consider liking and subscribing if I earned it, and see you in the next one.